More volatile than normal FOMC minutes day. Every 6 weeks there is FOMC, and then after FOMC, 3 weeks after FOMC is the FOMC minutes. And so today was the minutes. It's been a non-event, and we've tested not trading on minutes in the portfolio calculator, and it's better to trade on the minutes. Today it was more violent than normal during FOMC minutes, and part of that was the Nasdaq coming through 15,000. And we'll go over the charts and the trades in a minute. Down 1,800. Based on the price action today, pretty happy that we were able to mitigate losses to that level. And we're at about a 4% drawdown, and really tough price action. Really the last 6 days since our last equity peak. So our last equity peak was August the 8th. And then it's been just tough price action, and we're ahead of the hypotheticals once again because we didn't trade on CPI, or we phased in during CPI, so we're ahead of that. And so today we were close to the hypotheticals, and so down on the week, up on the month, quarter, and year. And so Thursdays and Fridays were typically our strong days. Recently they haven't been as strong, but we've had such a long period of chop. Maybe maybe Thursdays and Fridays will return to that more favorable price action. We've been profitable in choppy markets recently, but the type of choppy markets the last several days has been more difficult, and so don't necessarily need a nice trend, but just less, sharper V reversal, I guess, type patterns can sometimes be hard. Divergent price action is hard. And so that's what we had a lot of today. And let's go over the market and the trades on the day. So the Russell was had a little bit smoother of a downtrend, but still a pop at the open, and then choppy at the open. Looked like it was going to be sideways until FOMC minutes, and it started to sell off, and then it got really wild in here. That's the S&P, and then the Nasdaq. Just choppy. Sell off, and take out the lows, rally, like it's about to go on a big run, then spike down and take out the lows again, then rally like it's going to go on a big run, and then take out the lows again, and act like it's going to go on a big run, and then restart to go on a big run, and then finally roll over, and just it's still holding up here at the end of the day. It sold off. It went in our direction at the end of the day, but not enough to take us up on the day. We were short 3 contracts, and the ticks, you continue to see these ticks with narrow ranges on the upside, minus 1240 on the downside. Extremely weak market internals the last few days, and let's look at the 24-hour charts as well. But the advanced decline line has been down the last few days, but the if you look at this downtrend that we keep talking about, extremely contentious. Yesterday's high, though, just the high, was fairly close to the low on August the 3rd. So you get August the 3rd, 12 calendar days later. On August the 15th, the high to the low on 12 days is just they're kind of in line. There's not a lot of separation, and just a lot of this contentious chop up. We talked about how you have this downtrend channel, and it's either going to it'll eventually change. This channel will eventually change one way or the other. It could be a sharp move higher, could be a sharp move lower, and we'll see what happens, how that resolves. And so it looked like it should have made that sharp move lower. I thought it should have been a more sharp move lower today. It did not. The market was extremely choppy around that 15,000 level, and we can put it on 1-minute charts. And so you can see, if I draw the line at 15,000, you can see what I'm talking about. Just really try to support 15,000. Took it out, rallied. Took it out, rallied. Took it out, accelerated down, then tried to get back to it. And now in the after hours, it's kind of drifted lower without a lot of fighting. Not a lot of fighting going on here at the end, after the market closes. So, but just really choppy sell-off. Very divergent. Some of the most divergent and contentious price action we've seen in a while around this 15,000 level on the Nasdaq. And so it'll be interesting to see what happens next. The S&P actually did pretty good today. It was 5 for 7, up almost 2,000. Tick pulse was down on the day, minus 412.50. You can see what I'm talking about when you look at a chart, you can't always tell, but when you look at the trade signals and how a trading system would trade it and how it fights those shorts, here it's kind of a stop running price action here. It goes lower, but barely. And so, the best shorts were shorting it high. SR counter trend 1 minute E-mini S&P hit its profit target, shorted it high. The gap fill and mirror 2020 hit their profit targets at the open, so that was nice. Opening chop minus 562.50. These were 675 and 475. And then the news plus 250. This called the turning points. Didn't make a huge profit, but called 1, 2, 3 turning points, and then the last trade it lost. And then tick chop news got short here. Exited, got back in, up 937.50 on the day. So good trade there, taking the short trade. And 5 for 7 on the ES. It was a dog here recently, but today the Nasdaq is the dog. So about plus 2K on the ES, and the Nasdaq was 3 for 8, about minus 3,800. So let's look at the Nasdaq. And you can see here the two strategies that really affected us most were the Mag 7 minus $2,000 right here, and then momentum reversal 2 days in a row minus 1225. Without those, the Nasdaq is break even. Like I said, you can see how difficult it is to short either by stop running or by just this market that barely goes down once you get short, and then shorting it on a rally near a swing high point worked pretty well today on tick count trend. Would have been good to have a bigger profit target. In hindsight, obviously, tick reversal, you see how much this had to go through. Here's the entry price right here and how much this had to go through to be profitable. Holding it to the end of the day, it went more against it than for it, I believe. Plus 1135, so good trade, plus 575. And then EVPs, let's go over tick pulse. So here tick pulse is we went over it on the S&P and Nasdaq, short, stop run. Short, just won't go down very much, minus 405. EVP1, this is the year where the market goes against momentum. It's hard to get a good trade, a momentum trade intraday. This was a strong strategy in the past, and we have a low VIX. And it's hard to know when to take things out of a cycle, because as soon as you do, the cycle flips back. And this has been a long cycle of no momentum or momentum fighting. And so EVP1 lost on the long trade there. This strategy takes longs and shorts. It has a trailing stop loss and a bit different. It has $1,000 stop loss. This is long only, no trailing stop loss, $700 stop loss. So they take the same entry, but they have slightly different exits, and this one also takes short trades. So it took this short trade, stopped out, took this short trade, barely profitable, minus 1675, minus 725. Taking a look at the trades on the micros, go over the E-mini S&P first. So minus 4125 on tick pulse. Then you had SR counter trend 2v2 1 minute plus 5750. And then gap fills hit the profit target plus 67.50 and plus 47.50. And then opening chop was minus 56.25 and then plus 22.50 on opening chop news. And then tick chop news was 93.75. And then gap continuation in reverse was minus 102.50. We didn't have this trade in the S&P, in the E-mini S&P, so it's an extra $100 loss that we didn't see in the S&P E-minis. So I don't show it there. And so sometimes the data is different, slightly different enough between the micros and the minis to generate a different trade. And sometimes the data is slightly different on the servers to generate a different trade. And so I don't see it on the E-minis. We didn't take it on the E-minis. Comment below if you took it on the micros. Yesterday, I believe or the day before, the opening chops did about $100 better on the micros and the E-minis. And so EVP1, let's go over the micro Nasdaq trades now. EVP1 was minus 167.50. Long only EVP1 was minus 7250. Tick pulse was minus 40. 5750 on tick count trend NQ. Tick reversal plus 11250. OPV NQ plus 5450. Mag 7 minus 20250. And momentum reversal minus 12250. So all the trades are the same except this gap continuation in reverse. That kind of averages out the opening chop differences the other day where the micros did better. About $100 per micro, $1,000 per E-mini better on the opening chops. And so here is the money management algorithm indicator. Minus 1810, you can see it matched, the 1 minute versions matched the other versions, and you can see the trades, the market positions. We're net long at most here, 2, net short 3 here on the Nasdaq. This is the market position for the Nasdaq. Market position for the S&P, net short 4, and mostly the most we were net long was 1. And so this is the Nasdaq. We're looking at the Nasdaq. We can look at the S&P. These plots would be the same if this were the Nasdaq or the S&P. We're just pulling information from here using these MMSave indicators. They get the information, they plot it right here, the market position, and you can see the yellow histogram is the daily P&L updated on a 1 minute closing basis. And this is the intraday drawdown. Max drawdown 52.75 was the intraday max drawdown. It ended the day at a $3,000 drawdown from its best point, and the best point was plus daily peak was plus 1265. It's hard to see that. You could change the color on that. Let's change the daily peak to a color that's easier to see. So the daily peak was 1265, and the maximum that it was down was right here, 52. There's a drawdown of 52.65. That means the drawdown was about 4,000. Max drawdown was about 4,000. Max loss was about 4,000 on the day. So the biggest loss on the day was about 4,000, and that was a 1,200. That was a 52.75 drawdown from the maximum equity peak of 12.75. And so you have all that data you can use to trade things like the signal strength trader. This looks at all the original strategies and takes one trade. It was profitable today on the S&P. It did not trade on the Nasdaq. And the market position trader, this is the market position trader for the S&P. It takes the trades. It was plus 31.8750. Like I said, the strategies were positive on the S&P by about plus 2K. And this one was a little better the way it traded. And so the market position for the Nasdaq was minus 38.75, which almost matched the minus 37.47 that we had on the original strategy. So this stops trading at the end after it has a $3,000 loss on the day. That doesn't mean its maximum loss is 3,000. The way it works is it has a position stop loss of 3,000, and once there is more than a $3,000 loss on the day, it won't take any new trades. So if you come into the trade down 2,500, you're already down 2,500. It'll take the trade, and it may use a $3,000 stop loss. So you could be down 5,500 on the day. So your max loss on something like this, the way this works, could be almost 6K. If it won't trade, if there's a $3,000 loss in every new trade, it uses a $3,000 stop loss. It could be almost a 6K loss on the day with that setup. But that's lower than our largest losing day. Our largest losing day is 14K in the I believe in the stock index portfolio 34. So this is the average entry price, and this is interesting. It requires that for long trades, the entry for the current entry be above the average entry price of the hypothetical entries on the longs for the current position and below the hypothetical entry price for the shorts for the current position to take a new short, and it does better. It's counterintuitive because you don't think that you should be above the average entry price to take a new trade. I really wanted to make this average entry price get in if it was at a price better than the average entry price of the hypothetical current positions. Kind of a VWAP, come back to the VWAP, doesn't work. It makes the system worse. You have to get in at better prices, increasingly higher prices for longs, increasingly lower prices for shorts when you trade the Nasdaq on this. I haven't set this up on the S&P today. It was minus 1215. Let's see where it is on the month. It is 1585 on the month. It's kind of a slow month. August is kind of a slow month overall historically, and this is some of the lowest VIX readings we've had since the pandemic, and so it's kind of a low August. And so those are the trades on the day. Once again, let's take a look at those. On Wednesday, August the 16th, we went through a winning streak. 10 out of 11 days were winning days on July the 25th through August the 8th, and now we are 1 for 6, 1 out of the last 6 days. And so it's cyclical. And tomorrow, Thursdays and Fridays, longer term, this has been a favorable cycle. In the short term, it seems to have flipped. Mondays through Wednesdays were more favorable over the past month or two, and then Thursdays or Fridays were less favorable. We've had nothing but chop lately, and so we'll see if we can get more favorable price action. We don't need a massive trend. We can trade chop as well. We just need due for some favorable price action after 1 out of the last 6 days have been losing days. So I'm looking forward to tomorrow's trade for Thursday, August the 17th, 2023.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.